So overnight we had this sell-off that I was watching, right? And we created a sell side. We had some sell side liquidity, an overnight session. So it was actually right here at almost 4 a.m. And then we did sweep this low here, but I wanted you guys to pay attention to this candle that formed here, this imbalance candle. So when normally people who are inexperienced with ICT, what they would do is they'll take this as a fair value gap and try to trade the downside with it, not realizing we already swept the sell side. So instead, what you should be looking for is this candle to get, broken through like we had here and trade back into it and act as support. So now if we drag this across, you can see that this area held up really well on the 5-minute, and I could break it down in the 1-minute too and kind of go over the trade setup that we had today that we caught on 70% for SPX calls. So let's break it down to the 1-minute. So this was a key area here. This was 38.50 on SPX, and we kind of came lower here, but we were still just hanging around this area and not really, I was saying if we broke down out of this area on the 5-minute chart, because this is a 5-minute fair value that I was watching, that I would most likely be playing the downside to this sell side liquidity. Here to downside, we would target this low that we made pre-market. However, I saw these 5-minute candles bouncing, and we actually had a structure forming on the 5-minute chart. If you guys can see here, this would be structure forming on the 5-minute chart, and we got this break of structure here. Let me put a different color just so you guys can see. So we had this 5-minute break of structure here, and then I went back into the 1-minute chart and see what was happening on the 1-minute. So let's take it back to the 1-minute chart. So we had a break of structure on the 5-minute chart, and another mistake that people make when they're new to ICT is they'll try to short this order block here. They'll try to short this 1-minute order block here, and once again, when an order block gets broken through, it becomes a breaker. So in this case, on the 5-minute chart, we're holding this, you can call it inverted fair value gap, or people call it SIBI, S-I-B-I, is sell side imbalance, buy side efficiency, which means there's an imbalance on the sell side, which price traded back into, and then we're going to this inefficiency here on the buy side side of things. So once I saw this 5-minute candle actually bounce, I was expecting this order block to actually get broken through and hold as support to make a new high. As you guys can see, price came up, we broke this bearish order block, and we started acting as support as this was became a bullish breaker. And what I was targeting was this high here that we formed earlier in the day. Even here that they left equal highs. I actually took out my last contract here around 70%. I wasn't really gonna nitpick over this over one tick, so I was like, I got where price wanted to go. I'm more than happy with this trade. However, even when we traded back into this breaker here, people were like, oh, we created equal highs and we're going to, see downside. And I was like, whoa, wait up. We still have 2 equal highs here. This breaker is still holding and we still need to take out this high. So what did we do? Price came up and swept this high here by, just a few ticks. And then he started to sell off here to the downside. So that was a trade that we took for 70% on SPX calls. And now I'm going to go over basically the end of day price action. I didn't trade this. However, I was still observing it and watching what was happening. So let's see here. So we still had our 5-minute area that we were watching, right? I didn't have that drawn out because I already knew exactly where it was. And so we swept this high here. And now where is the market looking to retrace if it does come to the downside? What is the most obvious low that we have? It'll be right here. This is the most obvious low. So now we had 2 equal highs, we swept it, and now we actually bounced from this, which created equal highs. Even when price traded back here, I was looking for this downside to form. And let's just go to this 15-minute and kind of explain what entry you could have gone if you did want to play that downside. So, like I said, we had this sweep here, and then we had this break of structure here on the 15. As you can see, these candles were holding on the 1-minute. It would be obvious structure. However, this structure broke and we had a fair value gap drawn out, something like this. Price traded back into it, and then we took out this sell side liquidity here, which was also equal low on ES. So that could have been a nice trade, a very clean trade. You could have got about 10 to 13 points depending on your entry. And now let's go over what I was looking at when we actually ripped to the upside here. So let's go back into the 1-minute chart. Like I said, what I look for is sweeps, structure to form, a break of structure, and enter off either the break of structure or a fair value gap. What did we get here? We got two equal lows. We got this sweep. And at the same place where we had these equal lows, we have structure forming. Price was failing to break back above 75. And look at what price did when it did break back above 75. It had a very impulsive candle. And now you could draw your 1 minute fair value gap and trade back into it like this. You could trade back into it like this. And at this point, your target would be this high here. We already took out these highs. So now you'd be looking at the high day, which we did end up getting. But let me show you guys something else too. So we had this 1 minute fair value gap that was holding, right? And then we had this would be considered a bearish order block. However, price maintained bullish, because if you go on the 5 minute, this is why it's key to look at the 5 and also look at the 1 minute chart while trading these concepts if you are looking to scalp. We had a 5 minute fair value gap here that was holding without a problem. Every time we got a touch, we were just going between this order block and this fair value gap. However, you should know that this order block isn't going to hold because we already took out these equal lows here. The order block did what it needed to do. We already took out these equal lows, and now the market wants more upside. And as you guys can see, we held this 5 minute fair value gap with, easily. We're just bouncing, consolidating. And this is a negative on options because you will get data decayed as, market was coming to a close about the last 2 hours. But on futures, if you take an entry on, you could set your orders like how I do, 89 to 84. Go for an 86 average. Keep your stops below the candle, or 3-point stop, 4-point stop, whatever you want to use. And as you can see, your target would be this buy side liquidity here, because we already took out this liquidity here when we tapped it, and then we took out the sell side. And as you guys can see, we got this impulse candle up, and that would be your full buy side taken out, and that would be your take profit area. And once again, these are since market's been so volatile, these are very big moves on ES with very low risk trades. So here you're risking 3 to 4 points maybe, and you're going for about 20, 15, 20 points, whatever you want, depending on when you scale. But yeah, if you're looking for full targets, that's about 20 points, only risking 3 to 4 points. And then kind of to sum it up, the end of the day, we did trade back into this bearish order block on the 5 minute chart, and we did get rejections from here. And then we just had this random last 5 minute candle. I don't know what this was about, but I guess if you drag this across, you can see that it's turned into a breaker. But we really didn't get price didn't really fill into it, but this would still be considered a breaker since this was a bearish order block. We broke through it, bullish breaker, and then obviously I don't think anyone expected 20-point move in the last 4 or 5 minutes of the market. So, but take your liquidity, wait for your structure to form, and take your fair value gaps. Or just you could take it off the breaker structure. Personally, I like trading into fair value gaps just because how volatile this market is. And once again, it is very important to note pre-market, because this action here on pre-market was crucial for today on the 5 minute chart, or else I would have been like, you know what, we have to stop out of our contracts. However, I was like, okay, let's see what's really happening. Let's go to the 5, 15, whatever we need to do and see what was happening. And I was seeing these bounces that were forming on the 5 minute chart. We broke the structure on the 5 minute chart, and then I was like, yeah, our XPX calls are going to print, and we'll take out this high here on ES. So that's the trade recaps for today.